all across the state. And we have been in business since 1937. I've been working with Colonial since about 2002. So about 18 years I've been with them. And our main job is to make sure that employers are able to adequately offer benefits to their employees, and that the employees understand the benefits and get the most use out of them that they can. So the purpose of our meeting today will be to review those benefits, to give you guys some education on them and allow you to ask questions so you can better understand how they work and might be applicable to your lives. My primary job focus has been the public sector here in Massachusetts. So that's primarily who I work with, is the entities like yourselves, cities and towns. And I also work with the Commonwealth of Mass. This is the same benefit program that the state employees across the Commonwealth here will participate in. So this is the same benefit you guys have access to. I have a little PowerPoint presentation I'll pull up here, so we'll be reviewing that. I'm gonna kind of leave the PowerPoint up there and stray a little bit off of the PowerPoint just to give you my presentation. Certainly, like I said, if you guys have questions, we can save those for the end, write them down, and then we can go ahead and get those answered for you. Also, a lot of questions will come up about, well, okay, so I'm interested in this benefit. What do I do now? We will have a document that will be circulated around. We've opened up a call center so that in lieu of being able to come out and see you guys on site, you can actually just call right into this call center and catch my colleague, Christine Hanley. She can help with enrollment. She can help with questions. She can help with claims, anything that you guys might need. So it's a very streamlined system. You don't have to sign anything. You don't have to meet in person. You can do it right over the phone. Okay. Well, let's get started with that PowerPoint. And Kim, it's saying the host has disabled participant screen sharing.
Let me see.
That's probably something I did on my end, but.
Yeah. 1 second. Jessica, can you make him a host? Yep. Yep. Should be a co-host now.
I can't do it because you're the host. You have to make me a co-host.
Keep talking. Technical difficulty.
Perfect. Well, products we're going to review today are going to be all voluntary benefits. So these benefits for you guys are all payroll deducted. They are all optional. So if you guys do want to participate in these programs, you have to opt into them. So this is a perfect opportunity for folks who are interested to kind of find out a little bit more and to take advantage of them. But all these programs, like I say, are payroll deducted. They are portable. So anytime you guys leave employment, they'll travel with you. They're also available for spouses in most cases and children in some cases. So once you get, let's say, a life insurance for your child, you retire from Bridgewater, you can take this policy with you, continue to pay for it until you deem that child responsible enough. So all the programs travel with you, same rates, same benefits, anytime you leave employment under any circumstances. These are also benefits that have group underwriting and group rates, which means they may be more affordable than what you might find out there as an individual. And I can all but guarantee they're going to be easier to qualify for than what you're going to find out there if you're looking as an individual. All right. So as we were mentioning, some of these plans are all payroll deducted. They all travel with you if you're leaving employment, the same rates and benefits. The plans we're going to focus on today are going to be disability insurance, whole life insurance, which currently has no medical questions, by the way. So for us, this is a big offer. Most of the time when we meet with a client, we have a slew of different medical questions we would need to ask to get them into a life insurance, for instance. This whole life insurance right now is being offered with no medical questions. As long as you're actively working, you're eligible. We'll talk about the cancer and critical illness protection, the medical bridge protection, and the accident insurance as well. And just a reminder, guys, if you have questions when I'm going through this, just either make a mental note of them or jot them down and we'll go ahead and answer them at the end. So short-term disability. What is short-term disability? Well, short-term disability is a way that you can make sure that you protect your paycheck in the event that there's ever an accident or illness that keeps you from working. Let's face it, one of our most important assets is our ability to get up every day, get our butts out of work, get our butts out of bed and get to work and earn a living. So when something gets in the way of that, whether it's an accident or illness, it can be very difficult to make ends meet. So that's the idea of a short-term disability insurance. If there's ever a situation where you have an accident or sickness and you can't work, these programs come in and start to pay benefits while you are out. The only requirements here is that you see your doctor. Your doctor says you can't do your job, and then short-term disability will generally come in and start to make payments to you. A couple of things to consider about short-term disability. I always ask my clients, just go through a scenario in your mind. If I had to be out of work for a month, 2 months, 3 months, and my paycheck was stopped, how long would it be before I couldn't pay my bills, before it started to significantly impact me? And if the answer is, yeah, I can't go 3 months without having a problem, short-term disability can be a good option to give you some peace of mind and make sure if there ever is an accident or illness that you have monies coming in to make those obligations. So of course, this protects any paycheck in the event that you're unable to work from on or off the job accident or illness. So this coverage can be 24 hours a day. So anywhere you have an accident or illness, this program come in and start to cover that time out of work. The program can start as quick as the same day that you're out with an accident or up to 7 days after an illness. So what that means is I'm at work, I'm walking home, break my ankle in my driveway, I can't go to work the next day. That short-term disability starts to pay you that day, and it will pay on top of any accrued sick time you have or any sort of workers' comp benefits that you may be eligible for if you have that on-the-job benefit. So really, no matter what other benefits you might be entitled to for being out of work, the short-term disability provides that benefit on top of that. You do have some variables that you'll choose from on this short-term disability that will determine the final cost of the program. So one of the things we're going to choose from is going to be that waiting period. So we looked at a 0 and a 7-day wait. You can also choose a 14-day wait, a 30-day wait. So if you do have a lot of sick time on the books, you can actually make the program a little more affordable by choosing a longer waiting period. Now, to be clear, the waiting period is never paid back retroactively. So they call it an elimination period in our lingo. If you have a 7-day waiting period and you have to be out of work for 8 days with a pneumonia, they're going to pay you for 1 day in that scenario. They never retroactively pay for that 7-day wait. But that 7 days also doesn't cut into whatever benefit period you've chosen. And that next little bullet is actually going through those benefit durations. With the short-term disability, one of the second variables you're going to choose is how long this plan pays you for. Now, if you don't have any long-term disability, you can pick any one of these you want. If you have a long-term disability that's going to kick in, you probably want to choose the period of time prior to when your long-term is going to kick in. Typically, most long-term disabilities have either a 180 or a 90-day wait before they provide benefits. The idea would be short-term disability pays you for that first 90 or 180 days. If you're still unable to work after that, that is when you'd be eligible to start to collect your long-term disability if you have it in force. To be clear, we're only talking about the short-term. Colonial only handles the short-term side of things here today. But these programs can be really helpful, as the short-term is going to be more often than not where you end up when you have an accident or illness. The majority of your accidents or illnesses are going to be 3 months or less in nature. So having a little bit of time out of work for someone who has trouble, getting paycheck to paycheck can create a whole problem. So this short-term disability is a nice way to cover them really quickly after the accident or illness to make sure you got money coming in tax-free to cover the bills. Now, as we mentioned, you can design the plan by choosing the different waiting periods, the different durations. You can even choose the monthly benefit. That's how much this policy would pay tax-free to you per month if you needed to be out of work. The minimum benefit is going to be $400 a month. The maximum benefit is going to be 60% of your total salary. As you choose a higher monthly benefit, of course, the costs will start to be a little bit higher. But you can play around with those variables with us over the phone, and we can kind of walk you through them, or even through an online meeting, we can walk you through those variables and see if there's anything that'll be a good match. One other thing to be aware of is the definition of disability. A lot of people ask me, well, what is a disability? How do I collect? Well, disability is pretty much anything that's going to keep you out of work where your doctor says that you can't go to work. So as long as you're unable to work, not in fact working, and under the care of your doctor, for our purposes, that constitutes a disability. That's when Colonial is going to look at coming in and making payments to you. There are some exclusions on this program. Most of them are common sense. No bungee jumping, flying your own planes, committing felonies, addiction to drugs or alcohol, semi-professional sports, active military service, intentional self-inflicted wounds. Those kinds of scenarios would not be covered, but just about anything else you can think of, from a cat bite to H1N1 to COVID to cancers to heart attacks, strokes, broken ankles, whatever it is where your doctor says, hey, you need to take some time out of work. That's when this plan comes in and starts to make payments. One other thing I like to get out there in front too is a lot of times I'll get questions about pre-existing conditions. So one of the questions that we've had recently is, hey, I was just diagnosed with COVID-19. I would like to jump into the short-term disability policy now and collect benefits. With the short-term disability, it does cover being out of work because of the COVID-19. However, you have to be in the program prior to being diagnosed. So the way it would work, of course, if you're in good health now, you can go ahead and apply for a short-term disability. If you were to be diagnosed after the application is effective, after the policy is effective, that would be covered time out of work. But pre-existing conditions during the first year the policy is in force may not be covered. So another example would be, let's say that you went to your doctor last week. He says you need a knee surgery. You say, oh, perfect. I'm going to talk to the short-term disability guy today, and I'm going to sign up. So today rolls around, you decide to sign up for short-term disability. One of the things you're going to be informed on is that there's a pre-existing condition clause that will be for the next 12 months during the first year of the policy. If you were to file for that knee surgery during that first 12 months, Colonial would say, hey, this is a pre-existing condition. We're not going to cover that time out of work. Now, in that same scenario where you need that knee surgery, you come in, you buy your policy today, you wait 12 months and a day to get it, that's covered in full. So to be clear, pre-existing conditions just not covered for the first 12 months. Thereafter, they are. Also, to be clear, if you're not currently diagnosed with something, you sign up for the program and then a diagnosis comes after the fact. That, of course, is a covered event. The only thing that's not covered are those pre-existing conditions during the initial 12 months. Now, the other thing a lot of folks ask, well, how far back do they go in my medical records? They're only going 12 months back in your health history. So in the last 12 months, anything you've had surgery for, medical advice for, treatment for, time out of work for, those can count against you for disability purposes. But if you've been healthy, you haven't any time out of work in the last 12 months, you should be fine. There should not be anything that's considered pre-existing. Just moving on from there, maternity benefits. This is a big part of the program here. If it's not applicable to you, please try to let someone you know who it may be applicable to about them. We can sit up here till I'm blue in the face talking about maternity benefits, but a word from a colleague or a coworker typically means so much more. These maternity benefits are really just a no-brainer. The only catch with a maternity benefit is you must get into it before becoming pregnant. So you do have to be a little bit of a forethought. You have to have a little bit of a forethought here to get into the program before becoming pregnant so that you can collect those benefits when the time comes. Not only does the plan cover any complications that might arise from pregnancy that require you to miss work, but it actually pays 6 weeks for a normal delivery and 8 weeks for a C-section just for delivering the child. What that comes out to is about 3 times the annual cost of the policy. Just to be clear, you put about $1,000 in for the year, you give birth that year, you're going to get about $3,000 back. So it's a really great benefit for new families and for those folks that are going to be adding to a family. The only challenge I have is knowledge, making sure that we get this information out to folks ahead of time so that they can ask the questions, they can look at the benefits and get signed up before they're going to be needing it. So if you know someone in that situation or if you yourself are in that situation, please just reach out to us. We'll be happy to explain the options, the rates, and everything like that. Great. All right, so this is a great time if you guys have questions on short-term disability, think about those questions, write them down, and then we'll come back to those in the end. I'll move on here to whole life insurance. Now, I'm not going to spend a whole lot of time here talking about life insurance. I think we all know how life insurance works and what its purpose is. The life insurance is being offered to you guys now, payroll deducted, owned by you. If you leave employment for any reasons, you can take this with you at the same cost, same benefits. This stacks on top of any existing life insurance you may have through the city or town or through your individual portfolio. So no matter what current plans you have, this is an additional plan on top of it. This is a whole life insurance. You guys may know a little bit about life insurance. There's really 2 main types. It's term life or whole life. This is considered whole life. Some of the advantages of whole life is that the premium, the cost of the program will never increase and the benefit will never decrease for your whole life. So just like the word means, this program follows. The rates, the benefits are locked in for your whole life. They will never increase once you set it up. Well, why is that important? Well, you can imagine a situation where an insured is on a fixed budget in retirement. They've been paying a premium for the last 20 years. All of a sudden, that premium starts to go up, like on a term plan. It can be very difficult to keep up, especially if you're on a fixed budget. With a whole life insurance, that will not happen. your program stays at a predictable premium. You know exactly what it's going to cost today, tomorrow, when you're 65, when you're 75. That way you can plan to pay for it, and you can make sure that the funds are there to pay out to your loved ones when that time does come. Excuse me. Whole life insurance also builds cash savings or surrender value. If you've ever heard someone say, I borrowed against my life insurance policy, this is the type of policies they're talking about. As you pay your premiums into these programs, that money is building up as cash value. In the event of a hardship, a situation that you want the money back, just you need to get out of it, whatever the case is, you can go ahead and take that money out tax-free anytime you want. So that's your money. It's like a little emergency savings that builds up in the policy. You know, you get to 65, there's a hole in the roof, or you need an emergency surgery, you can draw that cash value out of the policy to use for whatever it is you need. Now, you don't get both. So if you take the cash value out of the policy, it'll be in lieu of your beneficiaries getting the death benefit when that time comes. But I leave it up to you guys to be able to make that decision about what's the most important at the time in your life to determine whether or not to take the money out or to leave it in there for my beneficiaries to inherit when the time comes. So the cash value is a nice feature of whole life. Again, it just is like a little emergency savings in my mind. If something goes really wrong, you can always access that money and use it for anything that you might need. But again, assuming that you don't use that money, this whole life insurance will sit there no matter what amount you've taken, 10, 20, 30, 50,000. When that time does come for you, that whole life insurance will pay out to your beneficiaries tax-free. They can use that money towards final expense, towards covering, you know, expenses around the end of life, or really anything that they need to use that money for. When we talk about whole life, we don't typically think about insuring things like our mortgages. Whole life insurance can be expensive. It's typically 3 times the cost of term life insurance. So covering large temporary debt like a mortgage, maybe not the best idea with it, but covering final expense and making sure there's an inheritance for your loved ones when that time comes, whole life does that very well. So I encourage you guys, if that's something that you're interested in, reach out to us when you have a chance. You can give us a call, you can give us an email, we can give you some rates and options on the program so that you can determine whether it'd be right for you guys. One thing you might see here is, depending at the time, the age that you enroll in the policy, you can actually have this paid up by the time you reach 72. What that means is by the time you get to 70 years old, you put enough money into this program that you never need to put another dime into it. So it's a nice way to make sure you're not paying a premium into retirement. Now remember, with these programs right now, there are no medical questions. I actually signed up a woman the other day at one of our state locations that's currently going through chemo and radiation treatments. She's eligible to get into this whole life insurance now, again, because there are no medical questions. Everyone's eligible. To be clear, you do have to be working and be benefits eligible for the Town of Bridgewater, or at least be still employed by the Town of Bridgewater. This is not eligible for spouses and children. They are able to get the whole life insurance, but they will still have to answer medical questions. For the employees, for the foreseeable future, there are no medical questions. So that'll be it on whole life insurance. We do offer term life insurance. I'm always happy to go over that with folks as well. If you have questions on that, again, it's something that we can always discuss offline. Term life insurance just locks in the rates for a specified number of years, usually 10, 20, or 30 years. At the end of whatever term period you've selected, that policy starts to go up in cost. Oftentimes towards the end of life, when it's really undesirable to have changes in premiums. So whole life never increases in cost, but more expensive. And builds cash value. Term life, more affordable, but rates are only locked in for a certain number of years, and there is no surrender value to term life. If you cancel it, you don't actually get anything back from the program. So that'll be it for the whole life insurance. If you guys have questions on those, again, note them and we can answer those at the end. Next program here we'll talk about briefly is going to be that cancer and critical illness insurance. This is a new idea for a lot of folks in insurance. Disability and life insurance, pretty common. This is kind of a new idea for a lot of folks. This is called a critical illness or a specified disease policy. You're going to see more and more of these policies coming out as health insurance gets more and more slimmed down. This is a way for an employee to basically self-insure yourself against major illnesses. Very basic program. You pick an amount from $5,000 to $75,000. In the event that you have any of the diagnoses listed here, they write you a check for the amount you picked. So let's just say you pick a $20,000 benefit. You get diagnosed with a cancer, they write you a check for $20,000 tax-free. You can spend that money on treatment, taking time out of work, recuperating, whatever it is you need to do with those funds, that's your money. It's paid tax-free. And the plan can pay for up to 3 diagnoses. They do have to be different conditions, and they do have to be separated by 6 months. But if I collected that 20 grand for my cancer, 7 months later, I have a heart attack, I could collect another $20,000 in that scenario. 6 months after that, I had a stroke, I could collect another $20,000 in that scenario. That would be the completion of the benefits under the program, but that's a great way to make sure that if you have a major health event come down the pipe, that you have the necessary monies to look at treatment options, maybe experimental treatment outside of what your health insurance will cover. Take time out of work, focus on friends and family, give yourself the opportunity you need to recuperate without the financial stress associated with it. This program does also provide $50 back annually if you're going in for your screening tests. That can be paid directly to you every year that you're in the program. This can be extended to cover spouse and children as well, so they can also be included in the program if you wish. Just a listing for those that may not be on the virtual side or just be listening. Things heart attack, cancer, stroke, major organ transplant, end-stage kidney failure, blindness, coma, and paralysis are all covered under the plan. Now, one of the really neat features of the plan is that it will never increase in cost, just like the whole life, and it will never reduce in benefits. This policy will pay whether you live or die from these major health events. So you turn 85, you have a heart attack, you haven't collected already on the heart attack, you would collect a $20,000 benefit at age 85 for that heart attack. If you don't make it to the emergency room, you die at 85 from that heart attack, that $20,000 is now going to your beneficiaries. So whether you live or die from that major health event, that money is getting paid out either to help with final expenses or to help recuperate while you are getting better and getting back to work.
All right.
So this program has been very popular. It's one of the newest programs that we're offering. If you guys do have questions on this, just feel free to shoot us an email or give us a call. We can always answer those too. The last two, and I'm going to breeze through these for the interest of time. This one's the medical bridge protection. This one also is part of the maternity package for those that are interested. This is also one of the coverages we see people really flocking to make sure they have coverage during this time. This program is pretty basic. It pays $500 for your first day in the hospital. It pays $200 per day thereafter. So if you ever need to be hospitalized as a result of an accident or an illness, $500 for that first day, $200 for every second and subsequent day. One big catch on this program, you do have to be hospitalized for 21 hours before it pays that benefit. So if you're in and out with some stitches, chances are you're not going to collect that benefit.
Yeah,
If
I'm
you
going to be.
deliver a child, of course, you're going to be there for a few days, $500 for the first day, $200 for every second and subsequent day. That goes the same thing for any other illness you might have, heart attacks, cancers, coronavirus, anything that's going to leave you in the hospital for more than those 21 hours, you'll be eligible to collect that $500 for first day, $200 for every second and subsequent day. You can cover the whole family with this program. There are some options you can choose from that will determine the rates, but mostly these programs are under $4 a week. No matter what health insurance you have, you inevitably are going to have some sort of payment of deductible or out-of-pocket expense if you get hospitalized. So this is a great way to mitigate some of those expenses. And Medical Bridge, like all the other programs we've talked about, stays locked in at cost and benefits as you grow older, even once you leave the town. So if you guys have any questions on the Medical Bridge, note those and I can answer those at the end. And then the last benefit we're going to talk about here today is accident insurance. Accident insurance is just a great way to make sure if you ever have an accidental injury, you don't get sunk by co-pays or deductibles. If you've got children that are active in sports, if you have a dangerous job, you have an accident-prone spouse, these can be great ways to make sure that if something happens, you're at the doctor's or you're at the ER, you're getting reimbursements to help out with some of those expenses. I usually just go through an example on the accident insurance. There are a whole slew of different benefits that are paid for different treatments. You're going to get paid irregardless what your health insurance or workers' comp does or doesn't cover. These benefits are paid to you on top of anything else. But let's just say a client has a broken ankle. Anytime you go to the doctor's office, emergency room, or urgent care facility after an accident, that's a $125 benefit. So you have $125 for initial treatment. If you get an x-ray, this policy pays a $30 benefit. If you're in an ambulance to get there, that's a $200 benefit. If it turns out that you have a broken ankle bone, that's a $330 benefit. If there's a surgery required to fix that ankle, it doubles to $660. They also provide follow-up benefits. So if you're going back to the doctors for treatment for that ankle, $50 a treatment for up to 6 treatments. You need physical therapy. They pay $25 a treatment for up to up to 10 physical therapy visits as well. So you can collect for those physical therapy visits when you go in. If you need crutches, it provides a $100 benefit. If you need stitches because of a laceration incurred, that'd be an additional benefit. So there's a whole slew of different benefit categories. Anytime you end up getting treatment in, you'll generate a benefit that'd be payable to you. All you guys need to do is submit proof of treatment, discharge paper, copy of bills. Colonial looks at what was done to you while you were there. They send you a reimbursement check for what you're eligible for. This can cover you, again, spouse and children. The children are only covered when they're considered dependents. So once they get above age 26, they'll no longer be covered under this policy. These programs are also fairly affordable. It's under $5 a week to get yourself set up as an individual. If you want to get a family plan, it comes in around $8.50 a week. And that covers you, a spouse, and all dependent children 24 hours a day, anywhere accidents can happen. The accident insurance, it seems like a small benefit, but I'll tell you, if you end up in any sort of major accident, you can start to really be thankful for it. I had the displeasure of dislocating my knee in 2015, and I went through what I would have been eligible for if I'd had this program in force at the time, and I would have gotten over $5,000 in benefits for that major injury. You know, you just go to the ER to get a broken ankle checked out or a sprained ankle checked out. You know, it's going to generate some benefits too to help. But something really major goes on, like a major car accident or anything else like that, it can really start to provide meaningful monies to make sure you can keep your bills paid. All right, so just a quick recap. Colonial voluntary benefits can help you cover expenses after accidents or illnesses. You can give us a call anytime to go over the rates and go over the options. We have a telephonic enrollment team, which can actually enroll you right over the phone. All of these programs, as we mentioned, are owned by you, payroll deducted and portable. They have plans